On May 6, 2026, a number appeared on a screen that most people scrolled right past. Samsung Electronics crossed a $1 trillion market cap, only the second Asian company in history to do it. The headlines celebrated, the analysts cheered, and almost nobody noticed what was actually driving it. It wasn't smartphones, it wasn't televisions, it was a chip the size of your thumbnail that every AI lab on the planet is desperately fighting to get their hands on. It's called high bandwidth memory, HBM, and it is the single most strategic resource in the global AI arms race. If you missed the NVIDIA wave of 2024, pay attention, because the real wealth in this cycle isn't being made in the brains of AI, it's being made in the memory. This is the trillion-dollar war between Samsung and SK Hynix, and by the end of this video, you'll know exactly which side of it you want to be on. Here's the problem that almost no one outside a data center is talking about. AI models have gotten so powerful, so fast, that they've outrun their own infrastructure. We have the processing power, we don't have the delivery speed. Engineers call it the memory wall. Think of it this way, you've got a Formula 1 car, that's your GPU, but the fuel line feeding it is a drinking straw. The engine can handle 800 horsepower, the straw can handle a trickle. It doesn't matter how good the car is, it's only as fast as the fuel reaching it. HBM solves that. It's a fundamentally different architecture, memory stacked vertically, sitting directly on top of the processor, moving data at speeds that standard RAM can't come close to. And in 2026, demand for it has spiked over 70% year over year. We are in a global supply crunch. The companies that can manufacture HBM at scale aren't just chip makers. They are, right now, infrastructure. If you control the HBM supply chain, you have a chokehold on the entire AI industry. To understand where the money is moving, you need to understand the two companies now fighting for control of the most strategically valuable supply chain on Earth. And they couldn't be more different. SK Hynix didn't win the HBM market, they built it. While most of the industry was still debating whether AI compute would sustain itself, Hynix moved, securing a preferred supplier relationship with NVIDIA before the supercycle hit and locking in the kind of design win advantage that takes competitors years to overcome. Today, they're not just a vendor in the NVIDIA ecosystem, they are infrastructure. Their operating margins recently touched 72%, a number that belongs in a software business, not a semiconductor fab. That is what genuine monopoly positioning looks like in hardware. But here is where this story gets complicated, because the company now threatening that position isn't a scrappy startup or a Chinese state-funded challenger. It's Samsung, the largest memory manufacturer on the planet, with more cash, more fabs, and more engineering headcount than almost any company in any industry. For years, Samsung's HBM effort was the industry's most expensive underperformance. They were late on qualification, late on yield, and NVIDIA wasn't shy about saying so publicly. Then came Q1 2026. Samsung's semiconductor division posted an operating profit of 53.7 trillion won, a 48-fold surge year over year. Their divisional operating margin hit 65.7%. Let that sit for a second. That figure didn't just beat analyst expectations. It surpassed NVIDIA's own operating margin for the same quarter. One of the most profitable chip companies in history, outmargined by the division of a conglomerate that the market had written off 18 months earlier. That capital is now being deployed at scale. Samsung is actively ramping HBM4 production for NVIDIA's Vera Rubin platform, the next architectural leap in AI compute, and using the one weapon SK Hynix simply cannot match: manufacturing volume. SK Hynix still commands roughly 55% of the global HBM market. But Samsung isn't trying to win on quality alone anymore. They're trying to make HBM4 so available and at such scale that the supply equation itself shifts. Which brings us to the question every serious investor should be asking right now. And it's not the one the headlines are asking. The question isn't who is ahead, it's does it matter? Because in 2026, the demand for AI memory is compounding faster than the entire industry can manufacture it. We may not be watching a winner-take-all war, We may be watching two companies race to supply a market that neither of them can fully serve alone. But here's where the war gets genuinely interesting, because the battlefield just shifted again. The next generation, HBM4, isn't just a spec upgrade. It represents a fundamental change in how AI memory is built, sold, and integrated. SK Hynix has made a move that nobody expected. They've partnered with TSMC, the world's most advanced semiconductor foundry, to co-develop custom HBM4 solutions. What that means in practice is that instead of selling a standard chip to any buyer who wants one, they're building bespoke memory tailored to specific AI architectures. It's the difference between buying a suit off the rack and having one made for your body. That level of customization locks in customers at a depth that a commodity supplier never can. Samsung, true to its DNA, is going the opposite direction. Vertical integration, everything in-house. Design, fabrication, packaging, all under one roof. It's the Apple model applied to AI infrastructure. Control the full stack, control the margin. Both strategies have real merit, and both carry real risk. The winner of the HBM4 race won't just win a contract cycle. They will define the architecture of every serious AI data center built in the next decade.
So where does the smart money go? Here is the honest answer. It depends on your thesis.
If you believe the NVIDIA ecosystem remains dominant and that specialization beats scale, SK Hynix is your vehicle. They have the relationships, the technical lead, and a margin profile that reflects genuine pricing power. If you believe in diversified exposure to the full AI infrastructure build-out, Samsung is the play. Consumer electronics, foundry services, DRAM, NAND, and now HBM, all under one balance sheet. But here's the part that changes the framing entirely.